Hey traders, Nick Shaheen here looking at the action from May 10th. So this was the day where overnight we had the new tariffs from the US hit, an extra 15 percentage points. So it went from 10 to 25, I think, on X number. I think it's 250 billion. I've heard several numbers thrown out. Let's just take 250 billion. The total number between that we import from China is, I think, 540-ish. So let's say half of it, okay? And this is the SPX we're looking at. This is a 15-minute chart. So you can see how, don't know what that noise was. So we can see how the last couple of days we've been whipsawed back and forth, back and forth. So this is the, today starts right here. And we opened okay, given the bad news. So the Earth didn't stop rotating. We didn't flip polarity. It was okay. And then something happened, and then we fell out of bed. Apple is what happened, in my opinion. Apple fell 4% almost, and its effect is big. So because it is in the square line of fire, speculation was that maybe China will retaliate using Apple. And then I heard somebody say that maybe even Trump was going to put the special tax on Apple phones into China. Not sure if that's even possible, but Apple took a big hit. 4% on Apple translates directly into the NASDAQ pretty harshly, and other indices as well, because now it's in the Dow as well. So that effect on the QQQ, for example, which is the ETF for the NASDAQ, is like 0.6 down, 0.6% or 0.5% just from the Apple effect. Okay, so it's a big, big hit. Luckily, by the end of the day, you can see a huge bounce. And I asked, is this the sort of November 2016 reaction where we had a big scary thing that could happen, which were the elections, and then once it happened, yeah, the investors put it behind them. So we've been struggling with this China headlines. Oh my God, when is it going to go up to 25 for a long time, maybe over a year? Here it is. It's here, and we're still alive. So by Monday, I could eat my words, because over the weekend, last time the U.S. imposed tariffs, China retaliated almost instantaneously, I think. They said they were going to retaliate. They even said beforehand what they were going to do. This time they said they would retaliate, but here we are half a day later and nothing. So maybe they'll come out with something over the weekend, and maybe I'll wake up to this gone. So this is the 15-minute action. I think the travel was about 130 S&P points in one day. That's a lot. From high to low is pretty big. I think the low was 28.26. The high is 28.90 something in the 92, 93 in the ES, the E-minis. This is the SPX, the cash. So this is the index. The other one is the contract. Okay, so we're looking at the index. 15-minute, all it tells us that we're crazy. We're going up and down based on headlines. So let's zoom out, forget the headlines. Let's see if we can trade some levels. We can't do anything about the headlines. All right, so I'm going to zoom out to a daily chart. Boom. Now we have information. We know that right here it was a tight situation, something we've got to give, and we had two scenarios: break down or break out. We broke out. That's pretty important, and it comes into play here. Okay, I'm going to mark it up. All right, so let's bring the scratch pad. All right, again, daily candles versus 15-minute candles we're looking at. So right here we broke out, and then we hit a roof right here. And this was pivotal, because look at this. This is important. So I'm just going to extend it. I'm not changing anything. I'm just showing you what happened before. So if I extend it further, you can see it's been resistance, broke out, so support. Right here failed as support and became resistance again. So if that's not pivot, I don't know what is. I don't like this depth, but that was Christmas. So we know this was all wrong. So really it's between here and here, right? This level right here, this zone was support until we lost our minds completely. Okay, so this line is pivot for this zone and that zone. We did whatever we wanted to do here. We came back into this zone. I'm going to extend it. Okay, for visual. And look, it matches this one. I didn't plan it that way. That's how it's working out. Okay, so this says what's going to happen later. Same thing. You see the same lines play out again. So again, resistance. We finally broke out of it. When was that? April, right? And now we are just revisiting the neckline. So in a perfect world, the neckline will hold as support, and then we do whatever we want to do here the next few days, and then we try to do whatever we did with every breakout opportunity before and see if we can break out to higher levels. I still expect 3,200, 3,300 in the next few months to come before the new lows that they're talking about, because without a shoe to drop, of course we can have a shoe that we don't know about and that just changes again, but that's any point in time. But given the P&Ls that we're seeing, given the fact that we still have the tax advantages and that all the central banks are keeping their foot on the pedal, they can't afford for rates to go higher. They're not going to raise rates. They're going to keep money flowing as much as they can to keep the mediocre growth that we're getting. Without it, we're going to fall apart. So I think they're going to keep this fake money going, and who cares why we're rallying? I'm just telling you what the charts are saying. So if this support fails, then we're talking about a dip to 27.37, 27.40 or lower. So let's talk levels. Okay, so now we agree, I'm sharing my opinion that this should be support. What is this? 28, let's call it the low today, 28.26. It's thereabouts. I remember it being pivotal on the way up. In fact, I'm going to go right now to find out what that number is. So 28.18. Okay, now it rings a bell. I shared 28.18 for a long time. CNBC was looking at 28.26. So this zone, the Friday low-ish, is pivotal. We can't deny it. If we lose it, okay, the next level is 27.93, and that sticks in my mind because it was so sticky for a long time, and we got sick of it for a little bit. And then below that, we just go to the point of control, which is 27.40-ish. And then below that, 26.40. I don't think we should go here unless China says they're going to dump $1 trillion worth of bonds, and I'm not sure they will have buyers for them. So, plus they own them, so I don't know if they want to do that to themselves. So we don't know what China's going to do, but these are the charts. The charts say that there should be support here, and let me go back to the marked up mess. So the charts say, number one, is where we were today at the lows is pivotal. Why? Because it has played a role for the last few months. I'm going to zoom out to see if we can see more. So number one from this whole video is today's low, the Friday low, the 510 low of 28.26 zone has been pivotal for months. So that's usually sticky because it means bulls and bears fight it out there often. So when it comes back to it, they're going to fight it out again, and that creates congestion, which is support on the way down, resistance on the way up. So it's support. So without a new shoe to drop, we should use it as a base to build another attack on this and break out from it. So do I buy calls right here? Not if I'm already long and I'm losing money. No, I just manage my risk. I would chase the rallies as they come. So if I'm just trading the daily candles and I'm not active, I would wait for a breakout. Okay, but if I'm active, then I can probably zoom in a little bit more and see if I can get smarter. And I can tell you that above 28.96, if they can take out that target, then they could take out challenge 29.10, which is also resistance. And then 22-ish is also resistance, and 30. So it all depends on your time frame. But know that there's support below and there's opportunity above. That's basically it. All right, so let me zoom out back to a daily. And actually, I'm going to go to a weekly. So now we see 5 years worth of data. So we consolidate, we go down and up and down and up, and then breakout. So this is where we're probably at. Trying to break out, but we can't just go out. There's a consolidation period. And here's the thing, if we can break out, we can set another leg like this. Why not? I mean, it's not that crazy. So let's go to a monthly. So it happens all the time, you know, consolidation and breakout. Sometimes we dip a little deeper. So if I keep it to the weekly, I was going to look at 28.26. So you can see it's been pivotal for a long time. How long? Right here, 2018. So for over a year. Okay, it's been pivotal. That's the line, 28.26. In fact, let's do that. Let's draw a line at 28.26. Sorry, it's been a long week and I have a migraine. Alright, I'll fix it later. It's somewhere on here, but I'll fix it later. Okay, so the moral of the story for today is that we have support below. We have opportunity to be above. All we need is the headlines to be conducive, or at least just disappear. I don't need new headlines, and things will be okay. Nick signing out. If you have any questions, let me know.